Hey, it's Michael Saul with the Stock Market Trading Watch List for Monday, November 14th, 2011. Let's take a look at the indexes, some sectors, and of course, I have some stocks to look at, as well as the usual suspects that we like to go through. So, the S&P 500 now appears to be in a triangle. And, I'm just estimating here. I didn't get out my ruler and measure it, but it looks like we're very close, if not at about 2/3 done. And John Murphy, who is a very famous technical analyst and a very good technical analyst, he wrote some great books, he says that the strongest triangles break 2/3 of the way down. Okay, now, maybe I'm misquoting him. If somebody has it different, just let me know. But I truly think that that's the level. I actually lent his book out to somebody who was studying to become a chartered market technician, right? So I was never, by the way, interested in those licenses, but he was studying for that, and I gave him that book. I never got it back, so I guess I could have Googled it. But anyway, that's what he usually says, based on my memory, that the strongest triangles break 2/3 of the way down. So we should be watching to see if the bulls are really going to push their agenda here. I'm off my ABC. All right. After we turned here, I was still looking for it, so I'm not saying that I knew right away when we turned. I'm sorry. I'm not going to pretend that that I thought that that was it. I was actually still thinking that we had a chance as long as the 78.6% retracement held. And technically, I guess we still do. All right. I mean, if we open above this, we trade above this, then okay, fine. But I mean, if we wind up gapping down or holding this level, this green level right here, the 78.6 of this little swing, then yeah, we do have a chance of continuing low. But right now, it looks like a triangle. And the measured move, if this was a halfway of the move stopping point, right? Pull over and get gas and eat lunch and have a nice little picnic, right? And then we would take this push up and then add it on to this last low before the break. All right, and that would bring us nicely above the high of the year. Now, so that's the measured move, the big measured move. The smaller measured move is the width of the triangle. So that one we can do. Just take something like this. And I'm even gonna, sorry about doing this live with you, but might as well learn how to do it. The width of the triangle, and then I just take it and add it onto here on the breakout point, which would be here, right? Something around here. That would bring us there, which is close enough to the highs, right? Which I still think highs on the year are definitely going to be seen. Now, if we take this measured move and put it here, which is the last low before the turn, notice it comes up right to the 78.6% retracement. So there are a couple of measured moves you can use. I don't want to be one of these people that just keep drawing lines on and go, we're going to hit this or this or this or this. I mean, right now, this looks bullish. Okay, I got bullish when we printed the follow-through day. We went higher from there, and now we've consolidated, so this is a bullish consolidation. Yes, it's below the 200-day moving average, but the follow-through day overrules that, at least for my rules. So, let's get confirmation. Let's see this thing break. I still think there's a chance that we have a stutter step at the 78.6% retracement of the range of the year. Okay, I still think that we could test that and maybe even break it a little, then come back and then form a consolidation or a pullback there. But as of right now, I'm waiting for this triangle to break, and when it does, as long as it sticks, okay, I'm going to be watching for us to move higher. First into Thanksgiving and then into the end of the year. All right, and like I said, there may be some stutter steps or stalls or pullbacks along the way, but the overall picture here is bullish. IMHO, right, in my humble opinion. All right, NASDAQ 100. NASDAQ 100 didn't have as good a week as the S&P. It wound up closing a little bit, but back above the 78.6% retracement. This is a mess. I guess, everybody will say how in hindsight it was bullish or bearish, depending on where we go from here. But obviously, if I'm looking for the S&P to go high, I'm looking for the NASDAQ 100 to go higher as well. And I think if it does break, Okay, if we do break higher, I think that high can be seen pretty quickly. Okay, so the high on year is about 80 points from here. So what's that, 4%? You know, give it. I'm just doing rough estimates there. So yeah, I mean, it could happen this week if the breakout is good and firm, right? But obviously, if I think we're going higher, I think this mess resolves to the upside. Russell, watching the 200-day moving average still. Okay, also in a triangle. Watching that 200-day moving average, though. Like to see the 200 hit with the NDX hitting the highs and the S&P hitting the 78.6% rate of the year's range. I like to see that all come together. And maybe, that would be a little pause point or stumbling block. And then a pause there or a pullback there, and then we gun it through. All right, so what are there? Only 8 days. Only 8 trading days left, and this week is option expiration. So yeah, it could definitely see a push to or through this here, especially if the bulls get some wind at their back. All right, here's the Dow. If anybody who cares, we covered the S&P and the Nasdaq and the Russell. Those are the main ones. Here's the Dow. Okay, showing some good relative strength over the 200-day here. All right, semiconductors. 200-day moving average, still resistance. Banks. All right, banks, yeah. Just wish they looked a little bit better. Okay, but if the financials get in line here, that's a weak triangle. That's not a good. That's connecting 1 point on the bottom, right? Here's if I connect 2 points, so it doesn't look that symmetrical here. But got to get this popping. Got to get this popping here. Brokers. Okay, here's the broker-dealer. Not looking sharp at all. This has to turn around here. Started by Goldman. Now, can we go higher without the financials? Yeah, but it's going to be tough. It's going to be tough, and it's going to be, we're news sensitive now, but if we start going higher and the financials don't participate, it's going to be that they're going to be watching for any little news or anything as an excuse for weakness to come in. All right, cyclicals are looking okay. XLB, yeah, not looking so sharp here. All right, let's look at Celgene. It was leading, not exactly rolling over, but not so hot. Biogen, yeah, Biogen doesn't look bad. Biogen looks like it could be in a bull flag here. Oh, that's my little one getting teased. So Biogen looks okay. Looks like it's in a bull flag here. Okay, sorry about that noise. But it's my little one getting teased by his brothers. All right, so here's Biogen, like I said, looking like a bull flag there. Let's look at healthcare, the HMO index. Starting to get some strength here. All right, we'll pull up the Fibonacci tracement. We have, 2347? Something around there. It was a 78.6% retrace. Another swing. All right. HealthNet got over the 200-day. Doesn't look like a super strong pattern, but let's see if it can get some acceleration from here. Aetna looking okay here. Aflac sitting below the 200-day. See if this can get pushed through here. All right, GLD. Yeah, starting to look okay here. Starting to look like it may want to try to get a push. Silver, whoops, spelling it right. It's the first step. Still in this what looks to be a consolidation / corrective pattern here. That only changes if we get up above the 200-day, in my opinion. Okay, here's OIL. All right, still going out of this little pattern we highlighted. Couple weeks back now. Here's OIH. Yeah, so unless I'm completely wrong here, and with my analysis, and the market gets hit by some bad news, or some weakness, we're looking like we want to try to push higher across a lot of indexes here. A lot of sec. All right, Apple not looking so sharp here. Came out of this consolidation to the downside, had the little fake to the upside. All right, if we throw the Fibonacci grid here, 62%, so below last week's lows. You got 369.44 as the next support. Is Amazon. That was a nice day on Friday, but got the 20 EMA and then the 50-day here. Google, still trying to get these highs here. I mean, the action's good. It's above the 78.6% retracement. It's a nice volume on Friday with the gain. Okay, let's see if it can push higher here. Baidu. It's still not a bad looking one here. I mean, it's above most of the moving averages, not the 10-day though, but that's okay. That's a quick one. See if it gets some confirmation. This one could be a sneaker. Maybe move up here and then up to the 150 area from there. All right. Goldman, we looked at already, but again, I mean, just really not acting nice here. So we want to see this thing pop, because if it stays weak, I mean, Goldman, still has some draw on the market for sure, some leadership ability. All right, Priceline had the big day last week. Now it's consolidated. Okay, what's it going to do from here? It's not really a flag because it's within a range. Let's see if it'll kick up out of it though. Head to new highs. Netflix. Everybody wants to talk about Netflix. Netflix here, this consolidation, 20 EMA still resistance. I mean, this is just a horrible, an ugly looking chart. Okay, Potash. And then I got a couple that I want to look at. Yeah, this is not really doing much. All right, APOG, Pogi Enterprises. Okay, Coil right here. Got the 200-day above would be the first target. Oh, it doesn't look like a big move. Okay, but the stock's under $11 right now, so that's all relative. AV. Okay, and this one trades on light volume. Be careful on this one. Okay, I mean, you be careful on all of them, obviously. I don't know what I'm saying that for, but with light volume, it could whip around a little bit, right? You can see these intraday moves, but, that means you have to be a little extra careful. All right, now if we run the fib grid, something interesting here. Okay, we came up to the 78.6, fell down below it again, but if this pushes up, watch this thing. Could get a little bit of a push here. All right, AAP, Advanced Auto Parts. This one looks like it wants to tag this high, but if we by chance see weakness on Monday, this little doji here may lead to a shorting op for a trade. That's AAP. And then ACM. I don't know, for some reason I have the A's in my head. Did a lot of A's today. Apple and Amazon, those are the normal ones, and then a bunch of these. Now, this is not a flag because there is no impulse. But it's a nice looking pattern. This was a nice looking bar on Friday. I mean, it could break right from here, or I'd like to see maybe it pauses and then breaks. But it could break right from here. But I don't know, these size bars that are relative to this one, you could see they all pause afterwards. So wouldn't mind seeing a pause and then maybe a push out of that. And finally, another ADI, Analog Devices. Okay, 38.39 is the gap fill. So that would be the first target on this. And then if it can get going above that, watch the 40 handle, and then up here, the 40.49 level. Have a great trading day on Monday. Let's see if the bulls push it here, get us out of this triangle on the S&P. By the way, if it doesn't break right away, doesn't mean it's going to be invalid just because it's not coming out 2/3 the way down. Okay, it could come up, bump its head, and continue to form out. But I'm still watching this pattern here, and we just look bullish into Thanksgiving at a minimum here. And of course, if we get too far too fast, we become overbought, and then from there, maybe we may take a rest before Thanksgiving, and everybody says, "Oh, we didn't go up into Turkey Day," so let's just play it out day by day. All right, have a great trading day. Talk to everybody again on Tuesday.